What's up, guys? Welcome back to my channel. My name is Fred. I am the Chief Market Strategist at Toastbeans, and today we're going to be breaking down the SPY, the triple Qs, what's happening with small caps, and we just had the FOMC rate decision meeting where the Fed cut interest rates by 25 basis points, and interestingly enough, like I mentioned in my previous videos, participants were, I guess investors were expecting a hawkish cut, meaning that they would cut once and they wouldn't cut anymore after that. But surprisingly, we got a pretty dovish Fed. We started QE back again. They're going to purchase more treasuries starting this Friday. And this bodes well for equities in general. So you can see that the S&P 500, we made a new high. We came down because of Oracle. Oracle reported pretty lackluster earnings, but I think a lot of buyers are stepping in right here, and that dragged down a lot of AI names like Nvidia. It's getting a bounce back right now, and it's affecting the tech market in general, and that's putting a damper on SPY. But you can see on the S&P 500, we came down, and then we're rebounding back again pre-market. So this bodes well for just the market in general, and you can see that we're now getting a bullish cross on the MACD. We're about to get it on the 4-hour time frame, and this type of pattern is actually pretty bullish. I've seen this type of pattern before where it pops, pulls back, finds the real bottom, and then pops again. So we saw that actually in the couple weeks ago, actually, with the Nvidia earnings. So we popped, we're about to break out, we get a pullback, forming that divergence, and we're off to the races. Same thing here, but on a much smaller time scale. So the triple Qs obviously took a bigger hit, but you can see that it's rebounding off of these moving averages on the 4-hour time frame again. And you can see that we previously got the rejection on the 200 moving averages, and then a bounce, and then a retest again, and now we're moving higher. So the strongest, of all these indexes is small caps, IWM. So previously I mentioned that pushing up against resistance, especially consolidating against resistance, is a very bullish outcome on a technical picture. So you can see that we got a rejection once, twice, and then third time. But however, we're getting multiple rejections now near resistance. So that, bodes well for a breakout in the near term. And if the IWM breaks out, then it should push up, the SPY as well. So you can see that we're pulling back and then we're pushing back up again on the IWM, and the small caps should outperform the S&P 500 and the triple Qs in the near term. You can see that the daily MACD is still looking strong. We're getting that breakout, and honestly, this still looks like 5 waves off the lows on the April lows. So you can see back in the S&P 500, we started a impulse wave off the April bottom, so it's a 1, 2, and then the whole thing is 3. We got a fourth wave, and we got the ABC consolidation, pulling back to the 100 moving average on the daily time frame, and now we're getting that fifth wave off. So this fifth wave should be should be that breakout blow off top type move before we get some sort of pullback, going into 2026. So hopefully this helps. It's better to shift your mindset as we, get closer to the end of the years into buying the dips as opposed to just timing, the sell-offs that we tried to do in the fourth wave. So you can see that the fifth wave is relatively strong. Pullbacks are shallow. So that's what I'm going to be looking for in the near-term future. The 4-hour time frame, the MACD getting that bullish cross is very helpful for the bull's case in the few weeks to come. So hope this helps. Yeah, thanks for watching my video, and I'll see you guys tomorrow. Peace.